So economists and analysts agree that the Nigerian economy and the markets have shown some resilience in the first half of the current year. That much was revealed in the June report released on Thursday by Commercial Partners and Investment Services Group based here in Lagos. Joining me here now from Commercial Partners is Nnamdi Nwizu. He's a co-managing partner at the group. Good evening. It's good to have you. Thank you. Let's have it here. It's a TGI. Yeah, we can use some relief, as it were. Definitely. Very operating environment. Give me a bit of the highlights of your new report on Nigeria's macroeconomics for the first half.
I'll say we touched on quite a few things. It was an interesting first half of the year.
Yes.
We looked at inflation, where we saw inflation hit 22%. And food inflation at about 28%, so still way above the central bank target of 9%. We had capital importation, quarter-on-quarter growth of about 7% to about 1.13 billion, but still 23% down year-on-year. So we're still struggling on that front. Interesting to see on the equity side, I had about $200 million or $220 million coming. And I think that was basically represented 4 times what came in the whole of 2022. I think 2022 had about $52 million coming in capital importation. Yeah. And in Q1 2023, I mean, we had $222 million. So quite impressive. GDP, we talked about GDP, where you had a 10 consecutive growth in GDP, came in at about 2.3% in Q1. Yeah. However, it's the lowest growth we've had in the last 8 quarters. So whilst it's good to still be positive over the last 10 quarters, it's still a bit of concern, the fact that we're still seeing a slowdown in GDP over the last, if you look at it over the last 8 quarters or so. So, I think that basically touches on 1 or 2 things. You still have the oil sector, and continue to see oil sector decline in terms of GDP growth. Even though we've seen an improvement from about -13 to -4%, but still not where we want to be. So, basically, you still have the non-oil sector basically boosting inflation, boosting the GDP and holding it responsible for most of the growth that we see.
Were you surprised, looking at half year, how the macroeconomics defied those headwinds in the first half?
I would say no and yes. No, because typically post-election, you tend to have a bounce. We saw that in 2015, we saw that 2009. Prior election, So we always see a bit of a bounce once you have a successful election. However, the yes part would be that the bounce was, the jump was way more than we expected. Stock markets climbed by about 18.96%. Pretty surprising, Also,
that was that much?
Yeah, that was that much. The last time we were here, I think it was about 2008. So if you look at the index at,
it was about 66,000. Yes.
So 2008 was about 66, and now we're about 62. So it's been a huge growth, and basically positive. I guess people feel a lot more positive with new president has come in, and a successful transition. A bit surprised with the resilience in the fixed income market, because we expected tightening of liquidity in the money market, and that would we expected that to affect yields and have yields go up. However, we saw a reversal in policies by the central bank, where they started crediting banks with CRR and changed the method of CRR calculation, where they had the arbitrary CRR, weekly debits and co. So they stopped that. That helped the fixed income market, in positive light. So
interesting scenario. But again, when you look at the are there lessons from the first half, both on the macros and the market side? What lessons for you at Commercial Partners?
I'll look at 2 things. One would be that there's a big correlation between politics and the economy. We just talked about the bounce that we had, 18.96 post successful handover. We've seen quite a bit of policies come in since the new president came in, and we've seen how market seems a lot more positive around what has happened. And so we start to see that, look, once you can get your fiscal side, which basically comes with having a new president, and you have confidence coming back into the country as a whole, you would start to see economic growth and start to see, and you can see that with markets responding. So markets basically help as an indicator of what you expect to see from the economy. So if you say everybody bullish equities market, that means people are expecting good things to come out from the economy as a whole, because the equities market is always a reflection of the economy, of the larger economy. And then also, you can have really good policies, but if you don't implement them properly, you would have serious consequences. And if you look at the Naira redesign, it's good to redesign your currency. It's good to, to try and fight fraud, try and fight people who are storing money at home.
Financial flows and all that.
All sorts of things. But when you go about it the way it was done, which basically, created an upheaval, a lot of hardship in the country. And we can even see that part of the reason why you had lower numbers in GDP in Q1. Lowest, like I said, you've seen 8 quarters. So great policy in terms of what you wanted to achieve, but the implementation was the challenge and basically created a lot of backlash.
So you're looking at the steps taken so far by the current administration. How do you think this will shape the economy, the macros in the second half?
We've had quite a lot done in the last 1 month plus. You've had the fuel subsidy removal. You've had letting the currency float, managed float or free float, whichever one we decide to call it. Yeah, the convergence with the power market. You've had electricity bill signed. You've had students' loan. Today we saw 2 things. One, they declared an emergency on food, and at the same time, with also a circular come out from the central bank reducing the CRR for merchant banks from 32% to 10%. So if you look at all those things, then, you now start to say, okay, impact on the economy. Electricity bill would help since states can now generate their own electricity. We expect to see states take the lead, especially starting with a state like Lagos, right? Very proactive. That would definitely help with power generation, which would help, get significant economic growth, right? The free float of currency should hopefully help bring in fresh inflows. Subsidy removal should help with reduction in borrowings from the government, right? Yes, it's going to impact inflation, and same with currency, but government will get to borrow much less, we expect, in the second half of the year, right? And yes, we can see a negative impact on inflation with the currency and also with the fuel subsidy removal, and let's see how both the fiscal and monetary policies tend to respond to that. But it's something that they need to, quickly come together to fight, and it has to be a combined.
So you're looking at these socioeconomic issues that, and the costs could push inflation higher. Some definitely looking at.
Still have some way to go. They're still talking about civil servants demanding salary increase. I saw something about 300%, and I was wondering, that would be crazy, right?
You don't think that's. Do you think it's an option?
Well, not 300%, because inflationary pressure would be crazy. It would be, enormous if you had to increase salary by 300% for civil servants.
From 30,000, roughly.
Yes, I agree, but still, it's going to be a huge impact. Because don't forget, it's not just from 30,000, but you're increasing all the way. So maybe people at the top might get less, but you're still increasing all the way, and then that would also impact the private sector, because not just if you increase salaries for public civil servants by 300%, the private sector is going to clamor for higher salaries, and you're going to have huge inflationary impact.
In fact, also, so you don't think that's something we should look at?
No, there should be an increase. I'm sure they'll figure it out, but 300% I think is a bit too steep. But definitely there should be some increase. There should be some palliatives. We heard about 8,000 naira to be given monthly over the next 6 months to 12 million families. We also, things like bus mass transit, how to reduce cost of transportation, things like that. I think that should be, implemented.
So this is the first month of the third quarter. How do you think we're going to end of the year based on your outlook at commercial partners? Let's sum it up. It
depends on a lot. First of all, it depends on a lot, because inflation for me is the big elephant in the room, and it's interesting to see how the central bank plays out with that, on the monetary policy side. And also the same with the currency, because as we have seen the currency go and the naira depreciate, we also need to start to see inflows. So we need to find a way to start to bring in FDIs into the economy, right? However, I think a lot of steps have been taken in the right direction.
What are those FDIs and FPIs saying? What are they saying? What are you hearing on the ground from outside? From outside the shows?
You've created a scenario where you have depreciation of currency, but you still don't have the flows yet coming in. So people want to see the currency stabilize. The band is too wide. You're trading 700, 800 bands. That's huge. By the time you narrow down to maybe a 5 naira spread, and they start to see liquidity, started some support from the central bank in the secondary market, and at that point in time, I think they'll get a lot more comfortable. Definitely for them, it's a much better deal coming in at 750, 800 than where they were before.
Yeah, because our assets are cheap.
Yeah,
so just pick it up cheap.
Definitely. And then also gives more money to the states, right? And it would be good to see the states start to implement new policies, because now FAC payments would increase, by about 70 or 80%. And with that, we expect to see the state government, local government start to perform a lot more.
It's a jumbo time.
It is. But we hope
it's money time.
It is.
Helicopter money.
we just hope that they get to invest it properly or use it properly, and it doesn't get filtered away like things that have happened in the past. You need to start to see the impact in the economy. The government has talked about a 6% annual GDP growth over the next 6 or 7 years. Yeah. If they can achieve that, that will be fantastic for the economy as a whole, especially seeing that the growth is coming from the non-oil sector. So it's not just crude oil price increase, but real growth transcending across.
Oil at 80 is good news, sweet music to your ears, isn't it?
Not really, because we are not seeing the growth in production. We need to see the growth in production for it to balance out. At that point in time, it will be sweet. Let's get back to 2.1 million barrels per day. Then it's fantastic music in my ears.
It's a whole lot of money.
Yeah.
Nnamdi, we got to let you go for this Friday. Thank you so much.
It's nice
having you. Co-managing partner at Commercial Partners. Thank you as always. Okay, let's dive into the market week. And today, with the equities losing some 256 billion naira, the index, that's the NGX, down about 0.75%, stopping the red-hot rallies that started in early June. This is my Friday night markets matinee with Johnson Chukwu, the Group CEO at Carry Asset Management. Johnson, it's good to have you. Let's talk about this week specifically at the market. Last Friday, the music was "There's No Stopping Us." Remember that music from the 80s? And you said that perhaps I was wrong, that the song was, I was a little bit too go happy. So what do you think I should play for the music tonight?
Well, Wilson, the first thing you have to give me, buy me a drink for predicting accurately.
Exactly. That's why it says a Friday martini. Martini for you.
So the key thing at this point is that this is the time for people to trade cautiously. And like I said on that during our engagement last Friday, that this is not going to be an infinitum gain, that the music will eventually stop. And we saw that. Good thing is not a sharp break. What we have seen is that the market is gradually moderating. We are seeing profit taking. This week, we saw 2 days of gains and 3 days of losses. And even today's loss is very marginal, just about 28 basis points. So if you consider the fact that we've seen more than, we saw more than 200 basis point increase on Monday, our market gain on Monday, followed by a 165 basis points gain on Tuesday. Then on Wednesday, we saw a market tank at 2.47%, and then 2% yesterday, and now 0.29%. So I think what we've seen this week is just a moderation of just about 0.75% in market index, so which I don't think is worrisome. But the key thing is that we expected that they're going to be profit taking. We knew that the market had gone to a point where people were buying anything. And I remember we had to quote Warren Buffett on that during that discussion. That it's time for people to be more cautious in their trading activities. So it was expected. I don't think it was a sharp break. It was a slowdown. We can call it a slowdown in market.
I decided not to play any music tonight. I don't want to get into any. I don't want to lose the bets tonight. So I decided to stay off any music. Maybe I'm going to think through for next week. I don't want to lose it to you again. But again, this is one of the big stories last week with the market red hot over FBN Holdings, the two big boys in the Nigerian market. Otedola on one hand, Otudeko on the other hand, are struggling for the majority shareholding of FBN Holdings. Do you think they've sheathed the swords in a manner of speaking? These stocks went down this week for about 2 sessions and the volume started to thin out. Is that particular big boys fight over?
Well, I wouldn't say the fight is over, but the basic thing is the two combatants or the two contestants have refused to throw in more money into the First Bank shares. So, and I think what happened was a lot of investors betted on the fact that the two of them will keep scrambling for First Bank shares. But what they didn't take into cognizance was that Obotudeko's holding or the acquisition that was recorded for him was basically cross deals, which meant that those shares were already in pseudonyms or in some other account that he had control over. So it wasn't like he went to the market and started mopping up shares in recent past. So people were thinking that these two gentlemen will come to the market and start scrambling for shares and the price will continue to gain. When they realized that those men were not ready to do that, which I expected that they wouldn't do that, because if you want to take a strategic position in any counter or any stock, you don't do it when the market is rallying. You do it when the market is tanking. So, and for that reason, people who went into that stock are trying to sell to exit. There are concerns that when two elephants fight, the grass will suffer. If these men should fight over the control of First Bank, that we're going to see it will affect their management and actually could affect their performance. So people are wary of that, and we saw that stock lose about 22% in this current week. It dropped from 20.3 naira that it closed on Friday last week to just about 15.8 naira as at the close of trade today.
Interesting. Okay, never get into the big men fight. Never. Stay away where two elephants are fighting. But let's get on to another bank, because this is good news from Standard Chartered of the UK, selling some of its African subsidiaries to Access Bank of Nigeria. How is this big news for Access Core, by the way? How about Twigo and the rest of his team?
You know, Access Bank Group or Access Group has actually become the greatest, the most aggressive financial institution in the country. And they will, at the rate they are going, they will be a dominant player in Africa.
They've always been aggressive, Johnson. Just a second. They've always been aggressive. You remember the 2010 consolidation. You know, they attempted at Access Bank to pick up one of the two big boys on Brosty, remember, the two biggest banks. Remember, they've always had fire under their belly. So this is not surprising. Move on.
No, it's not surprising, and that's why I say that the way they are going, that they have now come out, they can have fully established themselves as the most aggressive bank in the country, and the way they are going, they will be a dominant market player in Africa. They are likely going to start challenging the ABSAs of this world in terms of asset size. Already in terms of spread, in terms of presence in the African countries, I'm not sure beyond the likes of EcoBank, and there's another bank that has more spread, more footprints across Africa than Access Bank Group. So, and by acquiring Standard Chartered bank subsidiaries in Africa, it then means they're going to have their footprints in virtual African countries, and because they're already in several African countries. What this gives them, it gives them some level of stability or diversification in their revenue sources. They are no longer exposed to so much of geographical risk, unlike banks that have only locations in Nigeria or locations in Africa. They are now across Africa, which then means that if the Southern African economies are booming, they will get the benefit of it. If Eastern African economies are booming, they will get the benefit of it. So if Nigerian economy is going through difficulties, of course, Nigeria still accounts for the largest share of their portfolio or their business. The impact will not be as adverse as some other banks that have that are exposed to only one geographical location.
Interesting, Johnson. Is the big rally that was poured around the full subsidy removal and exchange rate unification, is that rally completely out now? What are investors' chief concern as we speak, looking at inflation, the whole declaration of national emergency over food insecurity and water and what have you? Do you think that honeymoon with the subsidy and exchange rate unification is out of the window? We're back to reality.
No, I don't think so. But what I expected that we're going to see a tapering in the excitement in the market, because we already seen some stocks trading at above their intrinsic value. We're seeing stocks without fundamentals gain something like 50%. I don't want to mention specific names, but there are counters that we have monitored, and they've gained at the rate that they cannot be justified by changes in their fundamentals. And boss, let me sound this note of warning. Some heavy lifting have been done on the economy, removing subsidy, harmonizing exchange rates. But the dynamics of the economy has not changed. The structure of the economy has not changed. We are still an oil-dependent economy in terms of foreign exchange earnings. It's not that we have seen foreign investors coming with aircraft load of foreign investors landing in the country. It wouldn't happen in the next 1 year. Neither are we going to likely see a deluge of portfolio investors coming to the country. So the expectation that we want to buy high and sell to foreign investors may not materialize. So people have to trade cautiously. And my approach has been to advise our clients to focus on value stocks, those stocks with strong fundamentals, those stocks that you can actually say in terms of earnings, they are growing their earnings. In terms of earnings per share, their earnings per share is quite high. So you look at earnings per share, you look at price earnings ratio, you look at the growth or performance over the past 2 years, and you look at the sector this operator is. So it's not just to scramble for any stock. I don't think I would say that the excitement has ended, but it has tapered, and people are now more cautious. Again, those who are speculators are also locking in their profit. People have made good profit, those who went in early. I remember when I addressed my staff on 30th of May after the president's inaugural speech, and I said, go and take positions in equities, advise our customers to take positions in equities. So those who took that advice will be spending to the banks.
You didn't invite me. I wasn't invited. Well, I'm not one of your staff, by the way. I'm a staff of Arise. You didn't invite me. You didn't make that public. So you gave, anyway, that was the disclosure. I'll try to plug in next time. But again, we're back to economics in the manner of speaking. So what's the big deal for the markets in the weeks ahead right now? What do you think will be the catalyst for positive trading sentiments?
Well, you know, we are going to get into we have gone past the end of the first half of the year, so we should expect those efficient operators to begin to announce their half-year performance. The likes of Zenith, I believe their result come out in a matter of weeks or days. The likes of GT used to come out quite early, so you're going to see. So the market will be driven by the performance announcements of the quoted companies, particularly those that are quite strong. Okay. And then the other things that will also shape the market is what happens in the foreign exchange market.
Okay, so Johnson Chukwu, okay, thank you so much. We appreciate that so much. Have a pleasant weekend. We appreciate your time. Johnson Chukwu, the Group CEO at Carrier Asset Management. Thank you so much for your time.